Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. So I'm going to be honest. Today's update, maybe not so much to do with options, a little bit more to do with, I guess, just like a style of trading, or how it kind of impacts my trading. Question that I got asked a couple weeks ago, and it was kind of like in the back of my mind, and I was waiting for like a opportunity to go over it. And as we get through, or as we're towards the end of earnings season now. Something just I just wanted to circle back to and go over kind of quickly, and it was uh, trader asked me like when do I go with the ETFs and when do I go with individual stocks when it for trades, and it's not a definitive answer when I go with one or the other, um, but I do have kind of like a general strategy when I want to go after, say, like the sector ETF. So when I say ETFs, I'm talking about like sector ETFs, not necessarily spiders or Qs, but like sector ETFs. So like XLE for energy, XLF for financials, XLK for tech, SMH for chips, so on and so forth. Um, so it's not like specifically black or white. There's a little bit of gray area, but generally speaking, I kind of have like a kind of like a process I follow, it's like when to go after one versus the other. So when I like to use these sector ETFs, okay, so it's when there's a clustering of catalysts in like maybe like a week or like a 2 week stretch, right? So earning season is like really like your typical scenario when that would play out. So I have XLE up here, so I'll talk about that quick. But when you have, say, like multiple big energy names reporting in like a 5 day to a 10 day stretch, right? Sometimes the names will be pretty highly correlated. They'll move together. Um, you'll find this with individual sectors will behave a little bit differently. Tech may be a little bit different, but like for energy names, I feel like they tend to perform kind of close to one another. You don't tend to see like a ton of significant outperformance or underperformance, especially in like the mids to like the majors. So when you have like this clustering of like a ton of catalysts within like like a certain window, so like a week to 2 weeks, then a lot of times I like to go with those sector ETFs. Like instead of trying to like target like an individual setup, like say like an ExxonMobil or Chevron or Hess, right, or BP. I mean, some of those are individually like interesting setups on their own, but a lot of them are kind of like similar, right? So if I get like a basket of names reporting in like a narrow window, then instead of trying to go after one specific one, unless I'm like really in love with the setup, what I like to do is go after those sector ETFs because it's just kind of like a broad exposure to that group with like multiple catalysts. So you figure like, if a lot of them come out good or a lot of them come out bad, then maybe yes, there won't be as significant percent wise as a move in like the sector ETFs because they're you have less exposure to like one individual name, but you should get a pretty good response in like the overall ETF, right? So when you get that clustering of catalysts, right, in like a narrow window, that's when I like those sector ETFs. Also for hedges, all right. So say whether it's like a bullish hedge or a bearish hedge, right? So recently we've had like the XLU and the XLRE as what I call like hedges. I mean, they were bullish trades, but they were basically hedge oriented trades in the sense that they were kind of like a yield plays, and yield recently, or at least, well, I mean, prior to the last couple of weeks, yield had been kind of performing pretty well as like a defensive strategy, right? So like a hedge kind of oriented strategy. So in that scenario, I like the ETFs instead of trying to pick an individual name. I like the ETF, so like a hedge, or if you say maybe you have like a basket, uh, maybe if you have like a basket of semis, right? Maybe you have like three, four, five chip stock bullish trades, right? Then you could look at the SMH as like a possible um, like broad hedge, right? It's not going to be like a perfect like one for one delta, right? With like the stock necessarily that or the option position you're looking at, but these could offer like nice opportunities for like a broad sector hedge. So like hedges, so like the clustering of catalyst and like the hedges, right? So now if there aren't any catalysts, and if it's not really like a hedge oriented strategy that I'm looking at, then I'd prefer to go to individual stocks, right? So with like the XLF, for instance, earnings season's played out. A lot of like the big news has been removed, at least for like the near term, right? In the XLF, because you don't really have much probably until January of next year. So January of 2020, until earnings season starts up again. So now, I wouldn't really be looking at the XLF as like a trade specifically at this point. I'd prefer to focus on individual names because you don't have the catalyst, and it really isn't like a hedge oriented trade. So I'd prefer to focus on individual setups, right? So, like JP Morgan looks great, but then what I'd like to do is maybe look at like the names like Goldman, right? So Goldman's been lagging. So, instead of like going with the XLF thinking like the group continues to grind higher, I prefer to like focus on the individual subs, maybe looking for like the names that are lagging the overall sector, right? Or maybe outperforming the overall sector, right? So when there's really no catalyst on the horizon, then I'm focusing back on the individual names. All right, and again, this is just kind of like a kind of like a blueprint for what I'm looking at, or why I focus on ETFs or individual stocks. It's not always black or white. It's not always 100% one thing or the other. Sometimes I will like do the ETFs even though there might not be a catalyst, or I might do the stock even if there's a kind of like a clustering if I really like a specific setup. But generally speaking, I mean, like that's kind of what why I would choose one or the other, or why I would choose ETFs sometimes over individual names. All right. And again, like it was a question that came up, and I hadn't addressed it, so I figured kind of like a good time to talk about it because as we're getting through like earnings season, coming up where we have retail, so XRT, I mean like that's one specifically where you might see that same type of scenario set up, but for the most part, we're through a lot of like the big names and like the really close window of like a ton of names reporting in like a very short period. So you might not get those opportunities for the XLEs, the XLFs, SMHs, and stuff like that. But just wanted to talk about it. So if you have any questions, please don't hesitate to reach out. I'm happy to help where I can. I hope this question or this video addressed that question that I got. If you like these videos, or if you're looking for more information on options trading, or maybe specifically option trade ideas, follow up with the link in the description of the video for more information on options and play. All right. Have a fantastic night, and I will talk to you all tomorrow.